Hey everyone, Abdel Misa here. So recently Elon Musk tweeted, listen to this, you can't sell houses you don't own, right? And then you can't sell cars you don't own. Yes, you can basically sell stocks you don't own, all right? So shorting is a scam. He is against shorting and shorting is a scam. I couldn't disagree more. I think Elon got this one wrong, so let's get to it. So let me preface this by saying that I'm actually a big fan of Elon Musk. Not only is he a visionary and an innovator, but what he impresses me the most with is how can he manage so many things at the same time. It's like if there are four Elon Musk, okay, he's the CEO of Tesla, then SpaceX, then the Boring Company, Neuralink, and who knows what else he has under his sleeves. He's just an amazing guy. Now, regarding this shorting thing, where he thinks it's a scam, and basically he's saying like, look, shorting should not be allowed; it should be banned. I couldn't disagree more with him, and I'm gonna prove it to you with facts. Okay, so I'm gonna look into it from factual and actually why shorting is really important for the functioning of financial markets and the economy. Elon Musk is not an expert in financial markets. He's an expert in many things, but he's not an expert in financial markets. So as much as I respect the guy, you have to be careful. Let me give you an example. So recently WhatsApp changes their privacy policies, and then Elon tweeted, hey, use Signal, okay? And then people Googled Signal. There is this public company, which Signal, and then look at the stock, all right? The stock went from less than $1 to almost $40, okay? Because people thought that Elon Musk was recommending to buy Signal. Yet that's not what he did. He actually was recommending to use an app called Signal, which is a private company. It does not trade publicly. So you gotta be careful, okay? So let's get back to shorting, and let's follow for a second the advice of Elon. Let's ban all shorting and see the world we live in, okay? So say you're a farmer, okay? So you have a crop, you're selling tomatoes, all right? Just to give a simple example. And you know what your costs are today, okay? And then you put together your business plan. And when you use this derivative market, okay, you can actually sell tomatoes in the future today, okay? You have a contract that you're allowed to sell, you commit to sell your tomatoes that you are going to produce in future, but you know what the price today. This is a very important function in the market, because so you as the farmer, you know your cost, you know the price, so you can say, look, I'm going to produce X number of tomatoes, okay? You take out this ability to use derivatives, all right? So then you really don't know the price in the future, okay? So you're taking the risk. So let's say it costs you $2 to put together like your tomatoes, and then in the future you think that it's going to be $3, okay? But yet a year from now when you sell them, or okay, so then now the price is $1, so you lose all your money. So if you're a farmer and you don't have that ability to sell into the future, guess what you're gonna do? You might not even decide that that's a good business for you, or for sure you're gonna lower the number of tomatoes that you are going to produce to reduce risk. So that will be a very bad impact on the economy. We might all be hungry due to the lack of shorting. Let me give you another example. Everybody likes insurance protection, okay? So that's a good function in the economy and the financial market, okay? So if I tell you like, look, okay, you own a stock, you like it over the long term, but you're afraid that it might sell off in the near term, okay? So there is something called put options. You can buy a put to protect your holdings, okay? So everybody likes that, of course, right? But what people don't know is in the back end, when these people that sell you puts, what do they do? How do they hedge their holdings, okay? How do they hedge? They hedge by shorting stock, okay? So what Elon does not know and is that not all shorts are just speculative. There's a lot of people that are short the market just to hedge their position, and in this case, shorting is a good thing. I think when people think about shorting, there is something ethically, and I will agree with this, that you're like, look, you're betting on the misery of a business, okay? So that I think is the issue, and that I would agree with, okay? But we can't just look at this from this perspective and ignore all the other things that comes with it. So the third thing is, look, what is really the function of a market? The function of a market is price discovery, okay? And not just me, but in general in academia, they think that it's very important for the markets to function as efficiently as possible, okay? And the idea is to try to find the fair value of a price, the fair value of a stock, let's say, okay? And this is where shorting is important. Okay, when you analyze the business fundamentals and you think that, look, there is no way this business is worth X, okay? This ability to short makes sure that the markets are efficient. And so if you take the ability of shorting, guess what? We're gonna see bubbles after bubbles after bubbles, because there is no way to control and find really the efficient price of a stock, okay? So, and we all know what happens when we have bubbles, okay? You go back and look at 2000 and look at the 2000 tech bubble, you look at the 2008 financial crisis, okay? So people are happy when stock prices go up, but at one point it has to end when it's a bubble. And guess what? When things go down, it creates a mess in the economy and people lose jobs and all of that, right? And that's not what we want, okay? And guess what? Like, shorting helps reduce bubbles. Let me give you a final example. How about frauds? Enron, okay? Recently, this German company, Wirecard, okay? Like, these are people that are cheated, you know? So they went and then fudged the numbers to make it look bad, to make it look good. But really, the reality is like it's bad. So then people have a job in financial market to study the company, study the numbers, and they're like, hold on one second, this does not add up, okay? How do you then not take advantage, but how do you then regulate this? Okay, so then you have people that can short. If you are not able to short, then these companies that have frauds, you know what, they will continue to thrive with their frauds. So to go back to our friend Elon Musk, he obviously has a bias in this case, because historically Tesla was heavily shorted and he had fights with hedge fund managers such as David Einhorn, okay? So these people were short the stock, and obviously like he did not like it. So the reality is like he has a bias, because when you're running a company, the last thing you want to deal with is these enemies that are short your stock. But guess what? Like, he did the right thing. He actually won the battle with the stock price having done so well, okay? So a lot of these shorts got it wrong, and then he won the battle. Okay, so as I just demonstrated, okay, shorting has a very important role in the financial markets and in the economy. However, look, there are things that we can improve, and I think this is where Elon and I will agree on, okay? I think this is why we need regulations and better regulation to continue to improve and improve and improve. And that's what the regulators have been doing. So here is, for example, something I 100% disagree with today, and I think Elon will be on the same page here. So when you have these hedge fund managers, they go to conferences and they basically present, here is why, like, my best idea is I want to short stock X, okay? That I have a personal problem with, because what they are doing is basically they are selling their book, okay? So they're going and presenting in front of everybody, and indirectly they're asking everybody to join them. They already have shorted the stock and they say, hey guys, join me, I'm right on this, short the stock. That, I think ethically I have a problem with. You're selling your book. I think Elon and I will agree on this. And this is exactly the same thing that had happened recently with GameStop, okay? Make sure, by the way, to watch my video, okay? Be careful out there, as I said in the video. You see how the stock is starting to crumble. So be very, very careful out there. Make sure you watch my GameStop video. But the idea of what happened in Wall Street bets is like people got online and they colluded with each other, okay? to make the stock price go up and then hurt the hedge fund managers. Okay, same thing here. Like when you go to these hedge fund managers and they go and they present and they try to sell their short ideas, I think there is some type of market manipulation there, and I will advise regulator to stop that practice. So with that, I hope you enjoyed today's interesting conversation. It's not often that Elon Musk gets something wrong. Okay, look, you know me, I say things how they are. Okay, I'm just gonna speak my mind. I tell you like the facts based on my knowledge. Am I gonna be wrong sometimes? Sure, I will. But my goal here is to educate you and help share some of the knowledge that I have acquired over the past 20 years. Okay, so I'll see you next time. Take care.